This is a bank reconciliation example that I'm doing, and it comes from the textbook, from the cash chapter, and I have included in the area where this video is located, I have included for you copies of the pages of the text with the problem, along with a second copy that has pertinent amounts and items circled. I have also included a blank Excel worksheet form and one that is filled out with a solution, just like the one you have in front of you on the screen. Bank reconciliation is made up of two pieces. One is starts with the cash balance according to the bank statement, and the second one starts with cash balance according to company's records. Now, a little background on the problem before I continue. It does have a couple comments in there that you need to be aware of. That all checks are written to satisfy accounts payable. All deposits are from cash sales, and assume that there's any errors in recording deposits or checks that they're made by the company. Okay, so cash balance according to the bank statement is $13,494.60, coming from the bank statement where it says new balance and that amount. Then we have a deposit of June not recorded by the bank. These are deposits in transit, deposits that you made and recorded in your records but didn't clear the bank yet, don't show up on the bank statement. So we have that one right there of $1,517.24. The next ones are outstanding checks. The third three here, 756, 58, and 60, are all items that you have listed in the checks written portion of the data and do not clear the bank statement, do not show up in the bank statement. The top one there of 738 for $251.40 is not a check you wrote this month. It's a check that is listed in the banking reconciliation for May, and you'll see that in that section there on the data. So it's a check that was written in May or prior that has not cleared even as of June 30th. So when you do the math here, you end up with $13,900.50 as your adjusted balance. The second section here starts with cash balance according to the company's records, and that's $10,481.90. Now that amount is not anywhere in the data. It has to be calculated based upon information in the data. I have a tape on the one copy with everything being circled that's necessary that says cash June 1st of $9,317.40. That amount is listed as one of the first data items. We add the June receipts, the $9,524.16, subtract June checks, $83.59.66, and that gives us cash at June 30th in our general ledger of $10,481.90. And so that's the general ledger balance before any adjustments. Now the next items are on the bank statement or derived from the fact that there's a difference in the bank statement and in the data. The first one is proceeds of note collected by bank including interest. That $3,000 number is the combination of the two miscellaneous items in the bank statement, $3,500, $210. Turns out that the $3,500 is principal payment on the note, $210 is the interest. The next one, $54, that's an error in recording check number 744. You'll see that we wrote it for $560.88 and it cleared for $506.88, which is a difference of $54. Okay, and remember those payments were to satisfy accounts payable. We recorded it at more than it should have been, so it's going to have to be added back to our cash. Next we have some deductions. check returned due to insufficient funds. That $300 is on the bank statement, and that would be a check that our customer wrote us that was bad. So we're going to have to do something with that. Bank service charges of $40 is on the bank statement, and there's 2 deposits that are recorded in error. One on June 8th and one on June 19th, where the amount that we put in the ledger that shows up in the data is is more than the amount that is in the bank statement, which means we need to reduce it by those amounts, because the amounts that actually show in the bank are less than the ones we recorded in our ledger. And so when you do the math here, you end up with an adjusted balance of $13,900.50. Now notice these 2 numbers match, and they have to match. The adjusted balance numbers on the first and the second section both have to match in order to be fully correct. Now the next part of the problem is to record journal entries as a result of items that are on the bank statement that are not in the books and records yet. Those would be items that are on the second part of the statement, because remember, these all came from the bank statement. We didn't know them until we got the bank statement. So we debit cash for the total of $37.64, which is that number right here, and we have 3 credits. One to notes receivable, the collection, remember, $3,500 receivable being collected, that would reduce the asset notes receivable. Same thing with interest. It's a $200 credit to interest revenue, a revenue account, and the $54 credit to accounts payable is adding back the $54 that we still owe whoever that was, because the amount cleared the bank for less than we recorded it for, so we really owe those people that much more money. The second part is for the deductions of a total of $345.40, and $300 of its accounts receivable being added back as a debit to accounts receivable. That's the check that was bounced, that a customer wrote us that was no good, so that we have to put that back and show that they still owe it. They've put the bank charges of $40 in miscellaneous administrative expense. That's good enough. It could be a more specific name. And we debit sales for the $540, because we were told that all those deposits are for sales, for cash sales, so it would stand to reason that that's the one we would debit. Then this is actually an error that I just saw. It should say June 30th, 2012, not May 31st. Should say June 30th. And the balance sheet amount should be $13,950, which is the same as the amount that is the adjusted balance. Why? Because this $10,000 number is what we currently have in there, and after we do the journal entries that stemmed from these amounts here, we will end up with that $13,000 figure. The last part of the problem talks about, it reads as, assume that a canceled check for $270 has been incorrectly recorded by the bank as $720. Briefly explain how the error would be included in a bank reconciliation and how it should be corrected. Well, we're saying it's the bank's error. Therefore, we're not going to make an adjustment. We're going to tell the bank that they need to make an adjustment to their records. And that amount, difference amount, would be $450.